Now I'd like to bring back in Alex to discuss our FOMO name of the day, and that is Meta. We have talked Meta so much this year, I'm beginning to think it's like our new Tesla. But Meta today, not seeing a move higher. It feels actually abnormal to say that we're talking Meta on a day when it's down almost 2%. But still, the analyst community still loves this name.
Yeah, and like Johnson & Johnson, it just simply changed its name when it found itself in some scrutiny. But, jokes aside, you mentioned this is one that has been a darling for many as it's made its shift to efficiency away from investment in growth. But that's not enough today, as you just kind of see the overall market really weighing on some of these mega cap tech firms, of which, although, Meta's come down a ton from its all-time high, at a $550 billion market cap, I think it's safe to still call this one a mega cap.
Definitely, and I would say that this analyst note, actually, I can maybe understand why we're not seeing necessarily a huge reaction to it, because when you pick it apart, it's a little bit, I would say, in reaction to news that was that of 2 weeks ago. So Argus did upgrade shares to buy from hold with a $270 price target, which does imply, about $69 of upside from here, or excuse me, $59 of upside, but they said the company's deep cost cuts should boost its profitability, even in an uncertain macro environment. They also highlighted the slowdown in digital advertising and the impact of Apple's ad tracking policy and how that weighs on a name like Meta. They did add that two of Meta's competitors are currently experiencing problems that could slow their growth. One being TikTok, which is facing that potential ban in the U.S., as well as what they said was sustained hostility of the U.S. government. And Twitter is, in their opinion, not shaping up to be as much of a competitor to Meta. So those are both, obviously tailwinds for this name. They did raise their 2023 GAAP earnings view to $8.21 a share from $7.53, as well as their 2024 forecast to $9.43 a share from $8.06. They do continue to praise Meta on the wake of the latest job cuts, as we did see now what has been some of the deepest cuts in tech. They are in the process of laying off two sizable rounds of layoffs, one being 10,000 employees, one being 11,000. Meta has been one that they increased their hiring by almost 90% over the last 3 years. So I would say this does feel like a rightful reduction and just maybe normalization. But I also think it's important to keep in mind when we say things like the year of efficiency, which I must have been saying, I must have said this like 6 times already today, Alex, but it does also impact, there's a trickle-down effect, because that's still, 21,000 people out of jobs. That still is significant. It's almost like we undermine that because Meta stock has been so strong, but it is important to keep in mind these are still people and their jobs are being affected. This analyst, though, sees this as a great way for them to become more lean. They're operating more efficiently, obviously. So the street likes this, but it's important to keep in mind that the outlook isn't necessarily perfectly rosy for a name like Meta, which, like you said, it's still down about 8% from its 52-week high. 12-month chart, though, doesn't look as positive.
It's a lot lower than 8% from its all-time high, though. This stock was $385 essentially not that long ago. So I know it went down to below 90, and it's had a really, really impressive attempt at a recovery here. But let's not shrug off the fact that this thing, was basically cut down to 20% of what it once was in pretty short order. But I also saw Jefferies likes it as well, moving their price target to 250 from 225. AI investment sneaking into Meta now as well. A lot of conversation around the efficiency stuff here, Jenny. So the street is picking up on what Meta is kind of throwing out there, but it's got a long, long ways to go still. Impressed with where it's gone so far in a really, really short amount of time.
I also think, not to be so pessimistic on Meta today, but I also think that there's a lot of optimism priced into the fact that TikTok will go away or be under new management. I do not see that happening, at least not in the near term, because I think TikTok is too powerful. I know that there's controversy with, its leadership being under ByteDance, which is a Chinese company, but I think TikTok is powerful. If I were to guess, TikTok's here to stay. So I think there's a little bit too much enthusiasm from people that don't fully understand social media, frankly.
Yeah, I guess my thought on that is just because you're potentially on TikTok, does that mean you have a mass exodus from Instagram? Are you never clicking on that app? I still feel like you kind of got your rotation. You click on one, you click on the other. Maybe one you like a little bit better than the other. But from a trading standpoint, I'm just going to lean into the analyst viewpoints here, build on some of the strength. I know it's down a little bit today, but in the grand scheme of the last few months, this is a pretty drop in the bucket type of a move, only down $3 after the stock basically went from 90 to 210. Looking at buying a call calendar above the market, this is the first time we're going to have a June option within a traded strategy here. So we're really just flying through time already in 2023. But May, June call calendar, the 235. If you looked back over the last year or two, you're going to see that there was a kind of a good attempt at getting back towards 235 after that massive gap down in the selling post some of the earnings of last year. If it's able to get back to those levels, so that'll be the peak of this particular profitability graph. This one has a 250 debit, so that means $250 in risk, not accounting for transaction fees. But because it's a longer term trade, it's May to June, it doesn't need to get perfectly to 235. You'd want sort of a slow grind towards that, and the likelihood that this would expand and the difference between those options would increase, which is beneficial for the trader, is higher the closer that we are to that May expiration and the closer that we are to that 235 strike price. But the nice thing about this, Jenny, is this is one way to look at it. It's super easy to customize this particular strategy, and there's tons of strikes, tons of expirations available in a stock like Meta.
And I was actually saying the 12-month chart looks a lot different than the year-to-date chart, but you're right. The max time frame chart tells more of a negative picture in this name, despite the fact that it has been a pretty consistent outperformer on the year and a name that has been shocking, I think, to many that have followed Meta for the last several years. But we will leave it there for our FOMO segment.